The world's biggest maker of business management software, SAP, has fired another shot at its rival, Oracle. SAP is acquiring Sybase. It's a deal that's valued at $5.8 billion. Sachin Shah is with us now. He is a special situations and merger arbitrage capitalist, or strategist rather, at Capstone Global Markets, and he's with us now in the newsroom. Sachin, thanks so much for coming in.
Thank you, Deirdre. Good morning.
First of all, let's talk about the price. So it's close to $6 billion, but it's a 56% premium for Sybase. Is this too high? Is this too much for SAP to spend?
Not necessarily. You know, a couple of things here. People need to, they're focusing on the valuation. Let's look at SAP historically. Since the Bob J business objects deal, if you don't mind, I'll use
They've been
yoga.
Pretty conservative, right?
Correct, exactly. And that's kind of my point, is that using a yoga analogy, they've been sitting in a downward dog pose for a couple.
I like this, Sachin.
Yes.
It's going to get me back in the studio.
Exactly.
So they haven't made any acquisitions, but Oracle, on the other hand, has made $42 billion worth of acquisitions since 2005. So one has been buying up like crazy, one's been doing nothing.
Yes. So they're transitioning in from a rest pose to a more balanced growth pose. And using the same analogy, more of a tree pose, more balance. And so they need to compete. It's obvious they need to compete with Oracle. It's less obvious that, you know, IBM just yesterday or so just mentioned they're going to make $20 billion in acquisitions over the next 5 years. There is deal activity happening, competition is growing, and the new CEO, this also shows the new direction of the new CEOs. Yeah. The old CEO is out, new direction for the company, new CEOs are doing this.
SAP may want, which is basically corporate customers are going to be able to run applications with this acquisition of Sybase on mobile devices. So it basically means everybody can be anywhere, and they're going to get the data that they need faster.
Correct. And one thing that was mentioned on the conference call, everybody's focusing on mobile. That is the future. That may be that might be the situation this decade. What is also important is China and emerging markets. That was highlighted yesterday, and maybe it wasn't, they weren't supposed to say it, but they mentioned exploit. So SAP is looking to, with this SY deal, Sybase deal, looking to grow in emerging markets in China. And so you have mobile, that's the future, that's the growth. China, emerging markets.
A regional play.
Exactly, regional play, and for that matter, this is where technology is leading. So this is.
So if you had to rank SAP, how it stands now with this acquisition, let's assume it's completed, it's integrated, things go well, versus Oracle and versus IBM, which company do you think has the best strategy, which is the best positioned? Yes,
I still believe Oracle has the best position.
So just going back to
just going back to this yoga analogy, as they're sequencing into a tree pose, SAP, Oracle is like in a Warrior 3. They are, in my opinion, they stand alone. They're second to none.
So that $42 billion they've spent since 2005 is paying off.
So Deirdre, since the Bob J acquisition, Oracle has announced BEAS, BA Systems, Java. They just recently announced a $650 million small transaction. They're going to continue. The other thing that is important to mention here with SY, this is something that's not known, as you mentioned, with 56% premium. Back in late 2007, Sandel Asset Management wanted to elect directors for SY, Sybase. They said the company is worth $28 to $39, and everybody was saying, how can that be? They got caught up. They got caught up into the situation with SAP acquiring Bob J and Oracle acquiring BAS Systems. So that kind of fell far on the wayside. The stock was trading at 25. So this shows that the valuation back then is significantly higher now. So that 56% premium is somewhat misleading.
Sachin, we have to leave it there. We thank you for your insight. Thank you very much. That is Sachin Shah. He is with Capstone Capital Markets.